News9, let's go straight into the earthquake and the tsunami which has jolted parts of northeastern Russia as well as the northern part of Japan, the city of Hokkaido. Well, first up, let's bring you the headwinds, the tsunami of headwinds that the Japanese economy has already been facing ever since the last 2 years or so. First up, the Japanese economy is struggling amid high inflation and global slowdown. The real GDP in Japan has fallen to an annualized 0.2% between the fourth quarter of 2024 and the first quarter of 2025. There's been weakness registered in the public sector as well as net exports have been low for Japan. Imports, meanwhile, have rebounded at the start of this year, 2025, and that low export, high import has lowered the trade balance, not in favor of Japan. Meanwhile, inflation continues to be sticky, and the 15% US tariff on Japanese exports is likely to further threaten the prospects of Japan's economy to pick up. Right now, Japan's GDP is valued at $4.18 trillion, and India is slated to overtake Japan to become the fifth largest economy by end of this year. For investors looking at Japanese stocks, the Nikkei 225 has been trading pretty much at the same levels that it was trading in March of 2024. Practically no gains and massive dips seen through the year and a quarter. Meanwhile, Prime Minister Shigeru Ishiba is facing resignation calls, but he says that he will stay put in office. Well, we also have a few inputs coming in from Hokkaido in Japan, which has been hit by the tsunami. And Hokkaido in the northern part of Japan is home to Toyota Motor. It's also home to the Isuzu engine manufacturing plant and, of course, the new semiconductor plant by Rapidus, which is coming up in Chitose. We have Kranthi Bathini here to put the Japanese economy and the Japanese stocks in perspective for us. Good morning, Kranthi. Well, if you look at the heat map of the Nikkei 225 this morning, it seems pretty much unaffected by all the news around the tsunami, barring just one stock, which is Toyota Motors, which is down about 0.7% or so in trade. Well, we understand that Japan has its infrastructure and has its disaster relief management completely in place, but a tsunami not really rocking the boat when it comes to investors this morning.
Good morning, Kartik. Yes, in Japan, the frequent earthquakes are quite common, but the kind of magnitude of above 8% is we can say this is kind of one of the highest ferocity, but they have a very strong infrastructure. With respect to the Japanese market and markets are concerned, the Nikkei has been in a consolidation phase, and the stock this morning, Nikkei index is kind of giving an indication, kind of a flattish kind of a situation. We need to wait and watch some more kind of a time as the day progresses. Is there any kind of infrastructure damage, or it's going to have any impact on the supply chains and the logistics services of the companies? We need to wait and watch. By and large, after the recent trade deal with US is concerned, with the different twists and turns, first of all, Japan is the first country in the Asia Pacific Pac which could able to finalize a deal with the US. And the Japanese Central Bank, Bank of Japan, has been mulling right now whether to go for a rate hike or maintain a status quo, because inflation is still causing one kind of worry at this point of time. But all the equity markets in the Asia Pacific region, emerging region, they have been watching the actions of Bank of India. But as a point to ponder upon, Kartik, many of these Asia-centric funds, they have, until unless these are the very large cap funds, their exposure to Japan is nominal as an investment avenue. Majority of the Asia investments have been deployed within the markets like China, India, and other emerging markets in the Asia Pac is concerned. And they always comes up with a disclaimer: we are investing Asia Pac excluding Japan. Okay, that's what the investment tempo. But last 5 years, if you see, the Japanese market after a downtrend, okay, the Nikkei went up to the level of 44,000 Nikkei. Now it's in a consolidation phase at this point of time. It is Japan by and large more about a large institutional kind of a favorite. Nobody investing in Japan. They expect a multi-bagger kind of return, like investing in India and China or South
Right.
Korea or somewhere.
Right.
It is by and large a stable kind of a market which offers a strong liquidity for the institutional investors.
All right, Kranthi Bathini, we leave it at that. Thank you so much for joining us this morning on this very important story that we have been tracking. Always a pleasure having you here on News 9.